reviewing. What were we doing last time? Anybody remember? What did we work on last time? Okay, we did the accounting equation. We did the crossword. What was the accounting equation?
A equals L plus OE.
Okay, and what does A stand for?
Assets.
Good. And what does that mean?
Stuff that we own.
Stuff that you own. Good job. And what does the L stand for?
Liabilities.
Man, you guys are so good when you're on phone. Okay, and what does that mean?
Things you owe.
Things you owe. Okay, and owner's equity?
Balance.
The balancing act. Okay. All right. So, last time what we worked on is different transactions. Do you remember? And we talked about if it's an A, like cash, and it's going up, what do we have to do to a liability?
You go down.
It also has to go up. Why?
Keep it even.
Equal on the other side.
They have to be equal on both sides, always. Okay? So, let's just do an example. First, let's say that we have purchased, we're going to purchase supplies with cash. Okay? So, what is supplies? It's an asset, okay? So if we go A equals L plus OE. Supplies are an asset. And let's say we spent $50. What's happening? You're losing cash, but what are you getting?
Supplies.
Supplies. So supplies would be a plus 50. Now, where does cash go?
Assets.
Cash or assets as well. And what happens to cash?
It goes down.
Minus 50. Now, do the two sides equal?
Yes.
Yes. Okay, good. All right. Now, let's say we bought those supplies on account. Say we bought those supplies on account. What happens?
Assets.
Supplies.
Okay, so we're still getting supplies because that's still an asset, right?
But you owe money. And you get a liability.
But somebody over here,
You owe money.
Ariana, said that we owe money. Okay? When we owe something,
Liability.
it's a liability. It's going to be a plus because it has to equal. Good job, Claire. Okay? So, what's the title?
Cash owed.
Accounts
Payable.
payable. Good job. And then whatever company it is. We'll say we got them from Staples. Now, what was that? Plus 50. Why?
It has to equal.
It has to equal. So 50 equals 50. Correct?
Yeah.
Okay. Now let's do one more. Let's say that we received a $5,000 investment from the owner of the company. What two accounts are affected?
Owner's equity.
Owner's equity and assets, but what under assets? The owner of the company invests $5,000. Cash, good. Okay, so cash is affected, and how much? 5,000, and it's a positive, right? Because we're getting it. Okay, and you said that the other one, do we owe it something? No. Okay, so we have owner's equity, and we have capital. And it's whoever's name of the company it is. Okay, so they made a deposit basically, right? So is it plus or minus 5,000? Plus 5,000 because they have to equal. Okay, so this is what happens when we invest in a company. Now, today we're going to talk about different things that happen on owner's equity. Okay? Now, before we start with the PowerPoint, I want to ask you a few questions. What does the word revenue mean? Don't look.
Like when you sell something, and then you get.
Okay, so we're gaining something. Revenue, do we all agree that we're getting something? Typically, we're selling something and getting the money, right? Okay, what does expense mean?
Like something you have to buy.
It's something we have to buy. So does that mean, what do you think is happening? We're losing. Okay, those two will really help you. What is a withdrawal?
When you take money out of the account.
So we're taking money out. So yet again, a negative. Okay. All right. So if we say deposit, what does that typically mean?
Put money in.
Okay. So if we understand that these words, revenue means plus, expense means minus, and withdrawal means minus, your life's going to be a lot easier. Do you want to walk with me? Okay. Omar, will you run the PowerPoint?
Do you want to hold it for a minute?
5, and then click where we go. Okay, go on. You can sit there. Nice company.
Yeah, for a minute.
Okay, so we talked about revenue was a what? It's a plus. Okay, so an increase in equity, owner's equity, resulting from the sale of goods or services, meaning this is a good thing. We've sold something. Typically, if we're in a business or we're doing services, that's what we want, right? So we want high revenue. Now, a sale for which payment will be received at a later date is called a sale on account. So will they always pay for a sale of goods with cash? No. So just like we had accounts payable where we were going to pay them later, what's going to happen to us? We are going to get paid later. So when they paid us later, or when we paid them later, it was called accounts payable, right? What do you think it's called whenever we get paid later? Accounts payable. That's a good guess. What do you think? It's called accounts receivable. Accounts receivable. That makes sense, right? We have to receive it. Okay. Okay, so in this situation, received cash from sales, $1,100. Okay, so received cash from sales. I'm going to come right over here. What are we getting? Okay, so we're getting cash. How much?
1,100.
All right, then what? It's from sales. What do you think we do?
They sold something.
Is it an asset?
Is it the owner's equity?
It's going to be owner's equity. Okay? So, go ahead. What it's going to look like is what we see on the board. Okay? We have received cash from sales. Cash, $1,100 goes up. It's under that owner's account. So Michael Delgado happens to be the owner of this company. If we were doing it and I was the owner of the company, it would be my own. Okay? So it would go under owner's equity, and it would be the name of the owner, capital. So we're keeping track of the equity of our company. Now, what we're going to do, is it plus or minus?
Plus.
Now remember, revenue, what does revenue mean? You sold something, right? So you have to use the word revenue next to it. way we know where did this money come from, why is it here? Are we good? Yes.
So capital, does that like represent like a bank or is it just?
It represents your interest in the company. Okay? So like, I'm the owner of the company, I invested $5,000, and then when revenue happens where I sold something for a profit, that increases to that account. So now my money's worth more, right? Does that make sense? Yeah. Okay, so here you'll see received cash from sales, $1,100 from cash, $1,100 under capital revenue. Okay, do the two sides equal. Now notice, then they're doing new balances, so you can always see how much cash you have, how much capital you have, and every other account. The next thing that's going to happen is we are going to sell services on account. What's happening essentially? What's happening? They paid with a card, or basically they said, hey, put it on my account, bill me. Okay? In a lot of trades, this happens a lot, where it's like you mow the lawn, they're gonna, my babysitter. I drop off my son, I don't pay him every day. They just tell me at the end of the week, how much do I owe you? That's on account, okay? So, in this case, what's happening? Okay, so we sold more services. So we have, what is it, 500? And what's it under? What's in our parentheses? Revenue. But what else is happening? Are we getting the cash? We're not getting the cash. So what is it? Will we get the cash later? Hopefully, okay? But that's the thing, we don't have it in our hand yet, so we can't put it under cash because we don't have it. Like if I was trying to spend this money, I couldn't. Could I? No, it's not there yet. So we have $500 of revenue. The other one, what did we say it was called whenever somebody owes us money? Accounts receivable. Now, okay? What's that? I'm Corey, except understand. I was trying to figure it out which one of those. Okay, accounts receivable. Shouldn't we write who owes us money? Who owes us money? Main Street Services owes us money. And how much money do they owe us? 500. Do the two sides equal? Are we good? Yes? And notice the balances are there. So we always want to total both sides. Now, we talked about expenses as well. Expenses are typically a negative, right? Okay, but we don't owe expenses, do we? No. It's basically what we have to do in order to operate the business. Okay? There are just some things that have to happen. So, like maybe a cell phone bill or something like that. We don't owe it. It's just something that had to happen in order to operate the business. It's going to go away from our capital account under owner's equity. Okay, it's called an expense. Okay, so in this case, paid cash for a communications bill for cell phone and internet service, $80. So what happened? What two accounts? We paid cash. So what's happening?
Lost cash.
We lost cash. So we're going to just start over. We lost